What a crazy day for the stock market today, folks. It was one of those days where we had the S&P and the Dow and the NASDAQ pretty much at break even, although they were choppy all across the day. And we had the Russell, the small caps index, go down over 1.4%. So yeah, it was not a good day at all for the small caps today, guys. So we're going to break down a bunch in this video. If you all find value, hit the like button, make sure to subscribe, and don't forget to get up to 17 stocks from Moomoo, linked right down below, or you guys can go to stocksurfest.com/Moomoo. Once you open up an account with Moomoo, you get one free stock. If you deposit at least $100, you get 4 more free stocks plus 2 shares of either AI or BBAI. And get this, if you deposit at least $1,000, you get 10 more stocks on top of those 7 stocks. So yeah, depending on how much money you deposit, you can get up to 17 stocks. It is free money, guys. Link down below. And now let's dive into it. So let's start off this video with the Russell 2000 today, guys, which we didn't cover at all today. We mentioned it briefly in the last video, but we didn't really get to break down the chart. This does not look good at all, guys. Again, it went down about 1.5% on the day. It closed under 1900, which is actually a very critical spot for the Russell. You guys can see roughly 1900 to about 1905. That was resistance from the beginning of September, also from the middle of November, end of November, early December, and from back in the middle of January. So you guys can see on this chart, if I zoom in, we broke out of 1900, 1905. That was a couple weeks ago, about a month ago. In the beginning of February, we ran all the way up to about 2005. And from that point, well, we started to turn around to the downside as the overall market, you know, the S&P, the Dow, pretty much everything started to pull back in the beginning of February, right? You guys can see this one from 2005 all the way down to where it is now, roughly 1900. That's a drop of about 5% in the past roughly month, a little bit over 1 month. And the fact that we broke under 1910, 1905, 1900, we closed under it, that's not a good sign for the bulls at all here on the Russell. And you could argue we have a lopsided, it's kind of a lopsided head and shoulders. You guys see that, right? Left shoulder right there. We got the head right here. Then we have the right shoulder right there, which I feel like there is some more work on the downside here. I feel like the right shoulder could be coming down anywhere from, 1850, maybe a little bit lower than that. It could start going down, lower 1800s if it starts to get really, really ugly out there. So the fact that we have this head and shoulders, we're under 1900, that is not the best sign at all right now for the Russell. And if you guys want to see my S&P 500 breakdown, my SPY breakdown, my NASDAQ breakdown, which is triple Q, go check out my last video called, I think, S&P 500 analysis, something like urgent warning to investors or something like that. Go watch that video because we're not going to break down the S&P in this video because honestly, nothing much has really changed from that last video. And look at the VIX. The VIX ended up going up 0.6% on the day, but still, guys, it is very low. The VIX is very low. It's in the mid-18s right now, and by the looks of it, on the 3-year chart and on the yearly chart, you guys can see we're at a very low point, which you guys know, we've talked about this before on the channel. When the VIX is at 18, 15, anywhere under 20, at least in the past couple of years, each time it's gotten under 20, let's just say it didn't stay there for long. So that's all I'm going to say. I'm not saying we're in for a crash or anything like that. All I'm saying is maybe we do get a little volatility moving forward here. It's in a very interesting spot. Let's just say that. The VIX being under, 20, and now it's under 18. Who knows? Or 19, rather. It might go under 18 for all we know, right? So what do you guys think? Let me know your thoughts down below in the comments section. And with that being said, let's talk about some stocks. I think we had Trip.com today. Let me pull that up. TCOM is the ticker. Trip.com ended up reporting after the bell today. Let's see what they ended up doing. It looks like the stock ended up closing at about, where did it close? $38.60. Now it's at $39.15. So it is up about 1.4-ish, 1.5% after the bell. And it looks like there's a ton of volume coming in. Look at that volume spike, guys, heading into close. That is pretty insane. So it looks like they ended up doing, let me see here. They ended up doing, where the heck are their numbers, guys? Are they not out yet? Oh, geez. The numbers are not even out yet, it seems like. God dang it, guys. Let me see if I could pull it up. Maybe on my phone. Maybe we're not seeing it here on, on the live news tab on ThinkOrSwim. Let me see. Trip.com Earnings. They're probably not even out yet. Okay, maybe we'll just cover them tomorrow, guys. Don't want to spend too much time on that if they're not even out yet. But yeah, this is one that looks like it's moving up past the, let's see here, the level of resistance from the past couple of weeks. Well, at least one of the levels, which is roughly at $38.50. Looks like we're breaking out of that point, today in general. Throughout the day we did. Now, after the bell, we are as well. And you guys can see 40 to 41. That was resistance back in the end of January. So looks like that's probably where we're going to go. Probably to 40, 41, at least in the very short term. That's the gap to fill. And if that does end up breaking, who knows, guys? TCOM could end up exploding to the mid-40s, maybe even higher. I'm actually not even sure what the all-time high is on this particular stock. Looks like maybe $45. Is that it? Let me pull the max chart up. Actually, no. All-time high was back in 2017. It was roughly $60 a share. So we do have some big resistance points coming up. Look at that. After $40, we have roughly 45. Then maybe 46.50, followed by 52. Maybe then it goes to 60. We'll see, guys. We'll see how the numbers actually end up looking. Let's see if they're out now. Nope, they're still not out, guys, but we'll see. Maybe we'll wrap around later on, or we'll cover them tomorrow. No big deal. So that is ticker symbol TCOM. And the next stock I wanted to go over, honestly, I wanted to go over big tech on this video, guys. We covered them a little bit, the big tech stocks, in the last video, but let's do a full breakdown on all 5 or 6 or whatever. How many? Well, there's more than that many big tech names, but when you mention big tech or say big tech, you think of 5 or 6 names. Let's break down those names, starting off with maybe the least popular big tech, quote unquote. Well, not quote unquote. It is a big tech name, but it's kind of fallen out of the group a little bit. It's Netflix, ticker symbol NFLX. Let's pull that up and see where this is trading at. So Netflix today actually went down on the day, roughly 1%, which is not the best sign by the looks of it. So we're actually starting to notice a breakdown here in Netflix stock. It's not fully dumping. It's not fully collapsing yet. It's still holding on for dear life above the trend line, which you guys can see right here, but it doesn't look like that's going to hold for long. It looks like we have a death cross right here. You guys see that? The 50 SMA is crossing under the 180 SMA. And what do we have here? If I zoom in a little bit, what do we have here? We have a head and shoulders on Netflix. Look at that. Left shoulder right there. We got the head right here. And now that we're failing at about, let's say, 330, 335, we have that death cross. We're under the moving averages. We are starting to form the right shoulder and the head and shoulders. You guys see that, right? Clear as day. And again, we're still holding trend at the same time. We're still holding trend here on the 4 hours. So what are we going to do, guys? Are we going to see that right shoulder complete, which means we're going to break trend completely and probably start to go down to the lows from, the end of December, early mid-December, being about 275, 280? Is that what we're going to do and see that right shoulder and the head and shoulder complete? Or are we going to see a pop right here, which I'm not really thinking that's going to happen by the looks of it, but who knows? To play devil's advocate, let's talk about it. Are we going to see a pop here at about 315? Maybe start to move back past 330, 335? Maybe we start to get a break out of the neckline at that point. I don't know. We'll see how it plays out, guys. But right now, it seems like the bears are slowly gaining an advantage here on Netflix stock. And that could lead Netflix to dump, really, to lose another 20, 30 bucks in share value if we do get that drop under this trend line. It could get ugly, guys. That's just my opinion. Let me know your thoughts, as always, in the comments, guys. And Microsoft is another one that we have to talk about because it is a big tech stock after all, right, guys? Ticker symbol MSFT. This actually went up on the day, up 0.6% on the day, and we ended up closing, it looks like, above. This is a very good move for the bulls here, guys. We broke out of 255-ish, which you can see that was support back in the beginning of February. Also, that was resistance in the end of November, early December. You guys see that right here. So we broke out of that point, closed above it. Now it looks like it wants to maybe fill the gap to 265, which right now, again, we're at roughly 255. So there could be another 9, 10, maybe even more dollars upside here in the short term, as again, that's the next gap to fill, right? You can see 265, that was the high from the middle of December, also from the beginning of February. That's where this could be going. Then if 265 were to break, which is where my next alert is at, 275 could be where it goes afterwards, which you can see that was the double top resistance from the middle, really towards, the beginning towards the middle of February. You guys can see that right here. So Microsoft actually looks pretty good. The chart looks pretty decent. Bulls are, coming in here at a higher low, continuing the trend. That's a good sign overall. Now let's see if we can fill the gap to 265, and we'll see where it goes from that point. Now the next one I want to go over is none other than Amazon, ticker symbol AMZN, which all you guys in my Patreon portfolio know, this is one of the stocks in there that I've been buying. Shout out to all you guys in my Patreon, by the way. All the details are linked down below if you're interested. So Amazon today did not do well. 1.2% red day for Amazon. And right off the bat, guys, out of all the big tech names, this is the most clear head and shoulders, clear as day head and shoulders out of all of them probably, right? We have the left shoulder right there, the head's right there. Then we have the right shoulder. You guys see that. Now we have a death cross. We're under the moving averages. Again, we had a 1% green, red day today. Not the best sign. So I'm happy about that, to be honest, because I'm not looking at this as a trade right now. Again, it's in my Patreon portfolio. I've been buying it. And honestly, I want to buy more. I want to get more of this thing if it gets under 90 bucks, preferably within $80 to $85. That's where I'm looking to buy even more Amazon. And I think anything under 95, 90 is a steal long term. If we're looking long term, 5-10 years out, maybe even more than that, it is a steal, in my opinion, anywhere under, honestly, under $100. Once this thing reported earnings and it shot up, you can see it got to about 117, 120, and start to pull back. I was like, this might be my chance to start to buy a little bit of Amazon, because I missed the chance when it was in the 80s before. That was a couple months ago. And I told myself, if it were to get back down towards 80, at least into the 90s, I would start to buy. And that's what I did. And I'm looking to buy now even more again if it does get under, 90 bucks, especially in the 80 to 85 range. So that is Amazon, ticker symbol AMZN. Let's pull up another one here. What else? Google. I think we talked about Google in the last video, but we'll cover it again here, guys. Google ended up doing very well today. 1.7% green day for Google. It looks like here it is holding higher lows, as you guys can see. Boom, boom, boom. 3 higher lows that have been held, and now we're starting to break out towards that 180 SMA. We actually closed right under it now today at about 96 bucks a share. You guys see that? So Google looks like it is poised to make a move, maybe towards $100. Maybe it even breaks $100, which you guys can see that was the high from back in the middle of November, early December, heading into the middle of December, right? So Google is one breakout away from going roughly to $100, at least in my opinion, guys. And of course, I'm not a financial advisor. This is all, my opinion. This is not financial advice. I'm just breaking down charts the way I'm seeing them, guys. And hopefully you find value in it. If you do, hit that subscribe button. You might as well hit the like button as well while you're at it. So 96 bucks, mark is at or above is where I'm putting my alert from there. $100, from $100, it could be fully breaking out at that point. So what else? We had Google, we had Amazon, we had Microsoft, we had Netflix, Meta. Let's see what Meta's doing. Meta today, I think, went down. Yeah, 0.2% red day for Meta. And this looks like it's a little bit toppy right now. It's topping out a little bit at about 190, 195, 185. It looks like sellers, especially based on today's price action, looks like sellers are starting to come in a little bit here, but it's not the end of the world yet, because overall we're still technically holding trend here on the 5-day chart. But if we go back to the 4-hour chart again, 195 is a big resistance. So it's kind of, sandwiched now between 180 to about 195, this $10, $15 window. What's Meta going to do in that window? That's the $1 million question. Now, of course, if we break past 195, 200, that is going to be a statement breakout for the bulls. We're not seeing any signs of that yet. We kind of are seeing a little bit of a breakout based on what we saw last week, but today was not the best day. So I guess we'll see how the rest of the week plays out. If we break 195, 200 again, that's going to be a very big break for the bulls. This thing might be going 225, 230, maybe mid 200s at that point, for all we know, right? So keep your eyes out on Meta. META is the ticker. And another one here, another big tech name is Apple, which we also talked about a little bit earlier, but I'll touch upon it again in this video. Apple did very well today, 1.85% green day. It closed at about $154, which, mind you guys, look at this chart, 155, 156. This has been resistance for quite some time for Apple. You guys can see here, Apple was, at about 155 back in September. We got rejected at that point, back in October as well. Also back all throughout February, heading into literally right now, the beginning of March. We're getting rejected at that point right now. So although I think Apple as a long-term play right now is a little bit overvalued, that's my opinion. Call me crazy in the comments, guys. In fact, I trimmed even more Apple a couple weeks ago. So I think it's a little overvalued, but as a trade, there's no doubt about it. There could be money to be made if it breaks out of 156. I mean, this thing could start going 160 initially, which you guys can see that was the high roughly from the beginning of September. Then from that point, 165 could be next, which was the high also from the roughly the middle of September. Then if that were to break, man, there could be even more upside for Apple. So I'm watching a lot of these big tech names, guys, mostly all of them for trades except for Amazon and Google. Those are the two that I'm accumulating right now as, long positions, long-term positions. Other than those two, well, I guess I'd be willing to trade those two as well. But for the most part, these big tech names, I'm looking at them as trades right now in the short term, and we'll see how the charts unfold over the next couple of days/weeks, guys. So with that being said, I'm pretty much that's pretty much it. I pretty much got everything out that I wanted to say in this video. If you guys like the video, you want to see more content like this, hit that subscribe button. Make sure to hit the like button as well, and don't forget to get up to 17 stocks from Moomoo. All the details are linked down below. Again, if you open up an account, you get 1 free stock. Deposit at least $100. You get 4 free shares of stock plus 2 shares of either ticker symbol AI or BBAI. And if you deposit at least $1,000, you get 10 more stocks on top of those 7 free stocks. So yeah, depending on how much money you deposit, you can get up to 17 stocks from Moomoo. All those links are down below, along with the Patreon link, the Webull link. And with that being said, guys, I'll see you in the next one. Peace out.